MMT, we're going to take that powerhouse Priceline.com that was up $18.25 on Friday on 1.2 million shares. $18.39 daily range. Nice movement. What we are going to take a look at, because Priceline, and here's where the stats are. Here is the call and the put structures. You can see where the puts were hammered. The 670 weekly was taking 65% of the premium out. So we're going to be watching that, and we'll put our bids in here. And we're going to be watching other various factors where the biggest premium on one side of the market was taken out on Friday, and that's 54%. Now, when we get to the 670 monthly, you can see that the 670 call had 34% taken out, change from the open. You can see the markdown column here, minus 780, minus 680, minus 680 here, 36%, 40% markdown on the 640 put as well. They minus the gap open down column is right here. So just to give you an idea, on the weekly, they mark it down $13. That's the kind of stuff I'm looking for. I'm looking for the 675 on the weekly. They marked it down on the opening bell, $10.80. And the last print was $9. And these are the ones that have the biggest percent level in the net change that has the most contracts taken out. So we're definitely going to be looking for the weekly pullback. These are the options that we're going to be doing. However, MMT, when we get over here and we take a look at I remember these days back in 1999, and here's 1999. You can see right here back in 1999 where Priceline was. And it's right up here. It closed at 675, but these are 1999 wicks that were slightly above that 700 handle. And one thing I'm going to do on the weekly chart is I'm going to draw a trend tool right through there. And that's 691. This is the lower end of those wicks at 687. And the body of the top right there, that's at about 681 right here of this weekly. And when did all this happen? I can tell you the date. It's right here. The weekly high right here was on, I remember, 7/4/1999, just like it was yesterday. So these are the weekly bars. We're at 675.43. So let's clear this. Here it is. 671. There it is, 674.89. Here, right at the top, 681. Okay, and right up here in this 1999 period, you can get up to 689, 690. These were the tops back then in Priceline. I traded it back then, I know. And the thing about it is, it's overbought. It's 95.76% overbought, even though that these weekly percent bull patterns, which are bull, that's the 1999 area of resistance, so we know that. We'll start trading this intraday because the price exhaustion is going to go up, and there was no top end wick. So starting on Monday, we're going to see what happens as we go up and possibly test a little bit higher resistance levels that were back in calendar 1999 area of where those key resistance levels are going to come from. And that, yes, these great bull rallies that we have had with these names, they all have to come down a little bit, just like Apple had to come down. They're all going to do relatively about the same. We were over here buying it that week. It shook down from the high of 655, and it had a pullback. It had a $25 pullback in this week because we shorted it with Rick Goley right up at the high, and there was that pullback. So it had a pullback, and it came right back the following week, and it's going to be due for another one of those $20 pullbacks in the next few trading days. Priority A+ on the list, overbought. Call and put structures. We'll start trading tomorrow morning. We'll look at an intraday for the weekly, and we'll look at using the monthly one. And one thing that we like about the deflated put option is because this thing here, if you take a look, was $180 up here. I mean, even in the last 3 weeks, that's $50 benchmark up here, $50 area. I'm down here at 1830. And it will go in the portfolio as Priceline makes its upward resistance levels and or immediate daily reversal level with put side transactions based on mathematical imbalances and put to call ratio. And not only that, on the weekly level, when we look at some of these put options that go out, then we take a look. Here's a 660 on a weekly. You can see that this was marked down from $80 down here to $14. You can just see it 4 weeks in a row. This is called imbalance, and master of making markets an option as a market maker is this is what we look for, is taking the other side. So that means that the call side of some of these, if you take a look at some of the call side, you'll take a look here. I'll just show you an inflated call. Let's just take a look. That's called inflated. Yes, they're great to go long, but look at how inflated. They're way up at the top. So for 4 weeks, you have had a major move in the weeklies here in the call side, and the calls are way up here. And here's the same 660 put. Just the invert. 4 weeks straight down. Time to lock it. Priceline.com, portfolio management, intraday management, short the exhaustion highs on this bull rally. Looking for a fairly decent pullback of about $20 over the next several trading days. Once we hit these, we could hit right up here in these upper trend lines, right below that 681 handle, 680. We could come right up here. It all goes back to 1999 numbers.